Hello everyone, my name is Desana Benaulin with NPM 2341116. Today, I would like to present about two important concepts in the capital market. Okay, on the first slide about introduction to primary and secondary market. Is it important to understand that a capital market is a place where company and government raise funds by using financial security such as stock and bonds. Investors provide capital by processing just security, and the market plays a significant role in supporting economic growth and investment activities. The capital market consists of two main assessment segments: the primary market and the secondary market. Primary market. The primary market is the market where securities are sold to investors for the first time. In this market, companies use new stock or bonds to raise capital directly from investors. One of the most common explains is an initial public offering or IPO, where a company offers its share to the public for the first time. The main characteristic of the primary market are the security are newly issued. Their transaction occur directly between the company and investor. Price and predetermined before the offering, and the company receives the funds generated from the sale. This market is important because it helps business obtain capital for expansions and development. Okay, next slide about secondary market. After security have been used in the primary market, they can be traded in the secondary market. The secondary market is where investors buy and sell existing security a multi salvage. Unlike the primary market, the using company does not receive any funds from these transactions. Instead, their money goes to investors selling to the security. Prices in the secondary market fluctuate based on supply and demand. This market provides liquidity, allowing investors to easily buy or sell security whenever they choose. Stock exchanges such as the Indonesia Stock Exchanges, for example, of secondary market. Okay, next slide about difference between primary and secondary market. There are several important differences between the primary and secondary market. In the primary market, security are sold for the first time and the using company receive the funds directly. In the contract, the secondary market involves the trading of exciting security between investors, and the company does not receive any money from this transaction. Additionally, prices in the primary market are usually fixed before the offering period, while prices in the secondary market change continuously according to market conditions and investor demand. This difference shows how each market serves a unique function within the capital market system. Okay. On the last slide about conclusion. In conclusion, both the primary market and the secondary market play essential roles in the capital market. The primary market enables company to raise funds by using new secondary market provides a platform for investors to trade to security and maintain liquidity. Together, these markets support business growth, investment opportunity, and overall economic development. Understanding the difference between them is important for anyone interested in finance and investing. Thank you for your attention.